Let's get to the equities market now. The Nigerian Exchange Limited recorded its third consecutive loss this week following profit-taking activities on Airtel Africa having shared 5.3% of its share value. The Nigerian equities market continued a downward slide with all share index dipping by 0.47%, closing below 65,000 reading there. According to the month-to-date and year-to-date analysis, gain return or fell to 0.5% for month-to-date and 26.1% for year-to-date, while market capitalization settled at 35.37 trillion respectively. And so take a look at the top 5 gainers for the day. Eternal Oil, Computer Warehouse Group, FTN Cocoa Livestock, Vitafood among the top 5 gainers for the day. Flip to the other side now, see decliners, NM Insurance and Suno Assurance, Gida Insurance and Cornerstone Insurance and Omatech were all in the red, losing at the close of today of Wednesday. So let's bring in Ambrose Omodon, Chief Research Officer, Investor Consulting Limited, to talk to us. Thank you, Ambrose. Good morning. It's good to have you. The Exchange Limited dropped by 0.47% yesterday. So what new do we have, or what more do you want us to know about this?
Yeah, actually, I would say that the cat is before the dog as we speak now. We are seeing that market is pulling back to create opportunity for bargain hunters to come back to the market and take advantage of the low price. And like you just read through your intro, that you saw that the highly priced stocks are the stocks that put the market down yesterday. It tells you that investors are also doing what we call portfolio shuffling. If you see a stock like Airtel losing almost 5%, tells that people are there are seeing opportunity in low cap stocks, medium cap stocks, and also blue chip company to take position, knowing that Airtel is not going to pay dividend either interim within this period, or their full year is not within this period. For that, they are taking their position to enter those stocks that have potential to pay their dividend, either interim dividend or full year dividend ahead of end of the quarter. For me, investors are really taking advantage of what is happening in the market, and also the physical development we are seeing from the government side is also a clue to guide investors, knowing that inflation has put most of the fixed income instrument in a deep negative position. For that, they are now trying to position their fund in sectors in the market that has inelastic demand of their products, that despite the high inflation, the company needs to put a positive number. Then you see that people are moving toward the service sector in the market. For me, it's a welcome development. There's no cause for alarm. Now that, yes, we have seen some move by the government. One, yesterday we saw the sign of a portfolio to declare the minister by the National Assembly, which now investors are waiting on, and just are waiting to see the policy either for short term, medium and long term from this different ministry or sector or of government to drive the needed economic progress. If that is made clear and investors are reading it, that will also change the momentum in the market. And also at the same time, yesterday we saw that the NNPC quickly have secured $3.3 billion cash loan from Exit. It tells you that this will help to kind of cushion the volatility we are seeing in the FX market. Yes, it's not the solution as to speak, but it's a measure taken to kind of set down what is happening now. If government on this can start doing similar things to make sure that they have long-term and medium-term plans to make sure that we have stable FX, that will now start bringing the world stability in the economy. I think what the NNPC did is a good move in the right direction.
Two things before I let you go, Ambrose. First one is that we saw that the unification of the exchange rate impacted heavily on the gains recorded in the last 1 month in the equities market. And it looks like the bearish sentiment recorded these few days, perhaps losing all of the gain that has been recorded so far. How true is that? And secondly, going forward, what are your expectations from the ministers that have just been unveiled with their portfolios yesterday? Yes, we understand they will be sworn in by Monday. Let's take these two before I let you go.
Yeah, actually, for me, I would argue that that the gain recorded from the May 29 have been taken away from the market. No, that positive sentiment and momentum that visited the market after the transition of subsidy removal, we saw that the oil sector had a positive sentiment that that drove the price to over to this level with the numbers supporting it. Now, also we saw the inclusion of exchange rate that will open door for foreign entrants, foreign investors coming to Nigeria. But I believe that at this point, people are taking profit in the market. But I think the market remains above 54,000 mark, which is that we have not even do that to see that what the market has gained, market has lost. Fine, I disagree with that. But the good thing is that now we are seeing moves by government to know that this volatility in the FX market is stabilized. But I tell you, this one is just temporary. They need to put a concrete plan on ground to know that we'll see a stability in the FX market that will drive the economy, that also will attract foreign investors. One. Then, as you just said, for the ministers that are doing a portfolio, I believe that all eyes on different ministries and also sectors to see the real plan of these ministers and what they want to do. And that also investors or Nigerians to start benchmarking either on a quarterly basis to see if they are making progress or not. But seeing their plan, their kind of strategic plan or their what they want to do, this is what we need first so that we can always mark and see whether they are performing or not. Okay. You can't just assess somebody when there's no work, there is no plan to guide whether it's moving in the right direction or not. Okay. But I think that they make a start. Yeah.
All right. Just a quick one, 30 seconds. What's your outlook for the market today? Do we expect a reversal from this bearish trends in the market?
Yeah, I personally said that market should also gain marginally today on the strength of these news that are coming to the market, knowing that the $3 billion that was just as a loan will also kind of stabilize the oil sector, all those importance of where we say that sector should be a positive sentiment in that sector. Then why we wait to see more from the ministers, their plan and what they want to do, that will also change the market. But today, I think the market is reacting positively to this physical development.
Okay, a good place to leave it. Thank you so much, Ambrose Omodon, Chief Research Officer, Invest Data Consulting. We appreciate your time. Have a great day.
You too.
As we're watching Business Breakfast, we're broadcasting live from our studios here. Coming up next on the program, President Bola Tinubu unveils ministerial portfolio set to sworn in his ministers, or the list of his ministers on Monday. Also coming up, over a period of 80 days, Nigeria has undergone a sequence of reforms with the elimination of subsidies and the merging of the exchange rate being particularly significant. Of course, we'll take a look, a review of Tinubu's policies in the last 80 days. What are the impacts on the economy? And finally, oil prices were choppy on Thursday after falling over the past 3 sections, with the undertone grim on worries that a slowing growth in China and possible further U.S. interest rate hikes will weaken fuel demand and the world's biggest economies. So let's get talking in a moment. We're back. Please stay with us.